Hi,
Awesome. Can you
Austin.
guys hear me? Hey, Dale.
Got
Yeah.
you, buddy.
How are
Got
you
you,
guys?
buddy. Good. Have you ever used Zoom, Austin?
Yeah. Do you want me to turn my camera on or just screen share?
Screen share, camera, whatever
You
you.
can turn your camera on as well, but let me, Dale, promote him to co-host. Otherwise, he won't be able to set a camera.
So go with your screen.
Cool. We'll throw you right to my charts then. Right what I was
Okay,
looking at this
Austin.
morning.
So a pleasure meeting you, Austin.
You too, Dale. Thank you for having me on. And Steve, I was
Yes.
listening to you this morning. I appreciate your insight, man. It's very insightful.
Thank you, Austin. By the way, now you can also share your camera if you want. I
see,
think
yeah.
so. Let me see. No,
Yeah,
sorry.
show-
Now you can.
Okay.
There you go.
There
You
you
Show
see
go.
your.
my-
You have a good pandemic haircut there, Austin.
Thank you. Well, I'm
You've
down in
gotten-
Florida, so we have barbers open. Everything is functioning here. I'm very grateful for that. So keeping me
Oh,
looking.
okay, buddy. Well, I clicked on your YouTube channel and
Yeah.
checked you out a little bit. I'm always interested in how people got into this industry, what they were doing before,
Mhm.
and their trading journey. You know how we all start off flailing around. Some of us are fortunate and have good mentors. I know you're a mentor, educator. Tell us what you had to go through.
Sure. So I actually was selling life insurance, like as a traditional, like financial advisor kind of thing. And that's
Right.
what turned me on to day trading because as an advisor, I was young. I was 19, 20 years old. No one was buying life insurance from me. So I had to figure something out. So I started studying for my Series 7 so I could sell stocks and mutual funds because the people that I knew, they had a couple $1,000s to invest, but nothing substantial. But at least I thought, hey, if I have a Series 7, maybe I could sell to them. And it ended up showing me in my studies what day trading was. And I fell in love with it because it lined up with so many of the things that I knew about myself even at that time, you know what I mean? And then as time has developed, it really has just become so parallel to who I am as a person. I was talking to my younger brother who also trades about this the other day. And I was like, I don't think I'll ever not trade, and it was funny because I'm talking to somebody here, Dale, who you have 40 something years of experience trading. And you know what I'm saying? You just never stop if you have the bug. So that's where I caught it. And that's where it's taken me to. Yeah.
Yeah, it's like being in the mafia. You're
Some
right,
kind of
buddy?
mafia.
That's
it.
You can't leave.
Exactly.
And I've
Exactly.
taken breaks, but even when I was taking breaks, I was still market watching.
Of course.
So Hotel California you could check out, but you could never leave.
Yep.
So did
Yep.
you have any? Who influenced you? You found a very important fact out early. That day trading was going to be your niche. A lot of people, I've interviewed Jack Schwager, and I asked him what's the most important thing that traders should know, and he said find a trading style that fits your personality. Who helped you with day trading? How did you come to use sticks? And would you consider yourself self-taught, or were there any influential people in your life earlier in your career?
It's a great question. The first person that always comes to mind is Tim Sykes, because without Tim and his outlandish marketing for penny stocks, I never would have really learned that there were educators on stocks. I would have thought that you had to go to college or something like that. So when I saw him, I bought a couple of his video courses, and it taught stocks and penny stocks, but I loved the technical analysis. I loved the understanding of volume and exponential moving averages and candlesticks. So that's where I kind of caught that bug. I then went from his courses to a few other stock guys. Cameron Foose is one of them. And I just tried to consume as much content as I could because I'm I don't know if you're familiar with Gary Vaynerchuk, but I'm a big Gary V guy. And he always is in this mindset of like, you got to eat a lot of crap in order to finally get the thing that's so valuable to you as your destiny, as your purpose. So I knew I was just going to consume a lot and try to figure it out. So I went from these penny stock guys to YouTube, and YouTube had a decent amount of Forex stuff, but not a ton. So what really helped me was trial and error, but also working with a community of people that I found on a Telegram group. And they were local to me, and they were also trading Forex. So we all used to meet up at my house and trade and try to do markups together and figure out trade ideas and just learn and study. We shared books and stuff. So I think it was partially my education comes from like the technical side of the stock guys and stuff like that initially. And then I developed it into my own kind of thing as time went on through YouTube and reading. The other person I have to give credit to is Mike Bellafiore, because I think the technical stuff and all of that side of trading is not easy to grasp, but it's simple. The harder side is the risk management and the psychology that you have to apply every day when you show up to click the button. So Mike's book, One Good Trade, is like my all-time favorite trading book. I hope one day that I can write a book that is as influential as that book was to me for other people, because everything just clicked. Like, that is the moment, if you ask me, like I see that as the turn when I was like, why am I trading so much? Why not just, it changed so many things for me. If you read my shirt today, it's do less, do it better, do it bigger, which is like my philosophy of trading. Trade less, trade better trades, and trade bigger as you grow. So that philosophy is really born from Mike's book.
Yeah, less is more, and
Exactly.
I teach. Tell me if you agree with it. That I tell people to write it down. I will miss trades every day. That's okay, because there's always another one around the corner.
Absolutely.
And I'm a big believer in communities and mastermind. And that's what you had. You had a little mastermind group that was meeting at your house. And, we only have two eyes, right? So when you have a community, you have more than two eyes, and there's something you may not be paying attention to that one of your contemporaries can point out that could be compelling. So, I appreciate that. So who was the author of that book again, Austin?
Mike Bellafiore. He's the co-founder of SMB Capital. They're a prop firm that trades stocks mainly in New York City. It's a really great book. And he also wrote another one called The Playbook that's really cool too. But just to comment on what you said there, Dale, about I call it selectivity, basically, which is like understanding that, yes, you're going to miss trades and you're going to see money move. I mean, you have to be okay with that as a trader. But where I really felt comfortable with it, and where I see other people that I've kind of positioned it to this way find comfort in it, is like, you as a trader, once you consume education, consume something, are going to try to apply that. But that doesn't mean you're going to be right every time that you apply it. You can't think that every time that you have a trade idea, it's going to be correct. So I have a checklist of questions that I ask myself before I trade. So some of my trade ideas, like the one you're looking at on my screen right now, this was just it was something where I would go through the checklist, still see the risk reward opportunity in it, but maybe I don't take that trade because it isn't as probable as it could be. And I call that selectivity, saying, okay, this could move and I could make 30 pips here, but I'm okay if I don't, because it could be better. And I want to put my money in the highest probability trades. So that's how I rationalize it.
Yeah, I call it my higher conviction trades.
Like
what do you think about this? A lot of people feel like they have to be portfolio traders, and they may have 8 different positions in different instruments. And when I started in the business on the floor, I knew guys that never left one trading pit and knew one market like the back of their hand, and never really had to diversify. And especially if you're a teacher or mentor, you teach for people to narrow their focus, especially at the beginning, to get to know a couple markets instead of trying to understand the whole jigsaw puzzle.
Right. I think portfolio trading has to fit your personality too. For me, it as of where I'm at now and where I was when I started, I still consider myself relatively young. It just doesn't fit me as a mindset, like how I live my everyday life. So day trading for me fits just my characteristics. I wish I had better vocabulary. I wish I was more educated to explain that cohesion that you need between your trading strategy and your personality, but it's so similar. I've seen people try to trade strategies or be in a sense like swing traders when really they're a day trader personality, and they suck at swing trading, but then they crush it at day trading. You know what I mean? So I think you have to align it with your personality too.
Okay. As a day trader, are you a believer in partial profits, or are you all in, all out at targets?
So what I'm doing right now is the best that I've had so far. I've tried it a couple of different ways, but what I do is I grade my trade setups simple, A, B, or C. I'm more often than not just avoiding the C setups completely. With those A or B setups, depending on which pair it is, because I get better spreads on certain pairs, I would give it either 2 or 3%. That risk then would be where the stop loss would be. And as that trade develops, depending on that grade, I'll take profits at different R multiples. So for B setups, once I'm up about 1.5 to 2 R, I'm taking partial profits and moving my stop loss up to mitigate the risk. And that's what's really been a game changer for me. And I know that some people don't agree with that and they like to go all in, all out, full take profit, full stop. I can't deal with that. I can't deal with going up 3 R and then getting stopped out without taking any money when I was already up 3R. And you know what I mean? It just it doesn't make sense to me.
Terrible money management if you do that. You should never let a big winner get away from you. Right. And what I like about partials is you get paid.
Yep.
You're tightening up risk on it, and you're still there. You may not be there with the same type of volume, but you're still there. And if you still believe in the trade and it pulls back, you're recommitting with principal rather than recommitting with profits rather than principal. Right. So why don't we get to taking a look at your setup and sure. Tell me what's at the bottom of your chart? What are you using down there?
So this is a trader's dynamic index. It's an RSI, which is this green line, and then two moving averages that are applied to the close value of this RSI. And the reason that I'm using that in combination with the exponential moving averages on the top where my candles are is, and this is the way that I rationalize it, to my knowledge, is that the RSI takes a lot of price and a lot of its information, not from price, from volume, whereas the EMAs are really gathering their data from price. So by using EMAs here with my candles on top and using the TDI on the bottom, when I can get confluence just of direction for bias with both of them, then I feel a lot more confident rather than just trading EMAs or rather than just trading with the TDI. Using two different sources of data helps me feel more confident in these trades. And the systems that I trade are very technical. I have 3 entry signals that I use, and they all have detailed stop loss and risk management strategies for how to manage them as they develop. So a lot of what I do is sitting, waiting, just for that right setup to present, and then I pounce. Like last week, I took 1 trade. The week before that, just 1 trade. So I'm very selective, but with these indicators, I'm able to be picky and really shift probabilities in my favor to have a pretty decent win rate.
So we have a very seasoned audience and community here in F.A.C.E, and
sure.
Someone is saying TDI is from Dean Malone. Is that where
I've heard that? I've heard that. I've never worked with Dean and I don't know his company, but people have commented that on my YouTube videos before. I found it just on someone else's YouTube video. I don't remember where it was, just through the videos that I was searching.
Yeah, but you know, like, I'm known for 3 drive formations, and it's like Solomon said, Austin, there's nothing new under the sun. And
never,
I didn't create that. I learned it from a guy, J.R. Hill, in the 70s. And so, that's what's so cool about it is,
you don't need to reinvent the wheel.
No. Who is it? Tony, the guy out here in Del Mar, he's a very famous, positive mental attitude guy. You don't have to reinvent the wheel. You find someone to model yourself after. Can't think of his name. Is it Tony Robbins?
Tony Robbins. Yep, that's who it is.
Yeah, that's who it is. So, all right. So you have TDI and you have the exponential. Yep. What about the colored boxes that you have on top? Can you tell us about that?
So the green and red right here?
Yeah.
So this is just where I would, as I was saying before, I would mark up a trade as if I was going to take a trade, where I would buy, where I would put my stop loss, or where I would sell and where I would put my stop. This was an idea that I had right when I woke up this morning. So I start my trading at 5 a.m. Eastern time. That's where my alarm goes off. So when I got to the chart this morning, I really liked what I saw on euro dollar, especially on the daily time frame. It looked bullish. So I created a risk reward setup based on what I call my A1 entry signal. That's just the name of one of my strategies, where I can read a stop loss and I can see potential targets, and then I'll watch that trade develop. Now, this is one of the ones where, number one, I was just waking up, but 2, looking back on it, probabilities could have been in my favor more. So this is something I really wouldn't put money into when I'm trying to be selective. But still, like you said, I want to see these ideas through. I want to practice and refine my edge consistently. And where I do that best is by generating a lot of ideas to then learn how to be in the best ones and be picky in those. You know what I mean?
Okay. So now you have some numbers inside the small rectangles, like 113.85. Is that like a bull bear line for you?
So the 113.85, I don't know exactly what that number is, but the way that I use these is pip measurements. So you see the 318 at the top and the 117 at the bottom. That's how TradingView, this platform, measures pips. So really what this is an 11.7 stop loss and a 31.8 take profit. And I can move this. Now this would be 34.1 pips or 35.1 pips. So it's just a measurement tool basically to see. And then this is the only other number I use on here, this 3. That'll tell me my risk reward ratio. So if I thought it was going to rise to 119.31, I could get 1.94 R there, just about 2 R. And that's how I use that tool.
Okay. So on my RSI, and I'm not using TDI, I'm assuming, I guess I could take a look at it, that at these new highs in the euro here, which is new recovery highs, I'm not sure if we're at new highs yet, new highs for the move, we could be, but I'm pretty sure that I'm not going to have a confirmed high here. Let me just take a look at mine just for a second. Yeah, we haven't quite made a new high there. So with the stuff you work with, what's going to tell you that
where this could go?
Rally might be getting long in the tooth, and it's set up for a correction, even if it's a bull market.
So what I like to use for daily movement potential is average daily range. And a lot of people use average trading range. I just use just one thing that I found on the internet. Like you said, nothing's new. I'm sure other people have used it, but I think that it makes the most sense. What it does is it basically takes the pin high to the pin low of the previous 5 days, all the movement of those days, adds them up and divides by 5. It gives you an average of where this thing normally moves over 5 days. So right here for the euro dollar, the ADR is about 88 pips right now. So what I would do is if I was looking at this as a long opportunity this morning, I would see that ADR line here as a potential profit target around 1.197. And then the other thing that I do sometimes use are just standard pivot points, which again are just based on yesterday's price action. That's how pivot points are calculated. So as we approach the R1 pivot right here, it's a little thin. I can make it a little thicker for you guys. As we approach that pivot, that's where I would say it could slow down. I don't like to use pivots to be like, hey, it's going to hit here and bounce. But I think that I have found more success in sticking with trends using just the 8 and 21 EMA, which is the yellow and red EMA here. And as long as this stays outside the 8 EMA, I would expect it to continue to ADR unless it was to reject the pivot and break down through the 8 EMA. That could start to signal where we see some
How's
slowing.
the ATR calculated compared to the ADR?
I actually don't know the exact difference in calculation, but I know that people have told me in the past that they get different numbers. So I am assuming it's different. Yeah. I don't want to speak on it because I'm not,
Okay.
And then the only other thing, average risk. No, I'm sorry. I didn't mean to cut you off. But the only other thing that you would notice on here is these lines back at the start of the day. So what I have here is what we call the Asian session, which is like the Australian and Japanese open. So that sets the Asia high and Asia low for me because I like to see pairs break out of that range before I trade them. If they stay in that range, they tend to be choppy for me more often than not throughout the day. So I can use that Asian range and this TDI and sometimes the EMAs to see where we call it reset or consolidation. That's where I would just stay away from it. You know what I mean? Like, for example, just to give you reference to that, if you look at GBP JPY this morning, there was a long idea here. Inside that Asian range, you see how this formation presented off the red. That's the 21 EMA. So that would be a decent signal for us. But being that it's still inside this range, it's something that on a Monday, especially with the GBP bank holiday today, I wouldn't take the risk on it. So I marked it up, called it an idea, and it's moving higher from there. But yeah, that's kind of how I would use it.
Do you believe in turnaround Tuesdays?
I'm not sure. You know, people say, is that we're like on certain days of the week, things reverse? I don't know. Dale, maybe you could tell me because you have more experience than me. Is there such a thing that every Wednesday I can just reverse it and I'm going to make money? If it's that easy,
you could be on the golf course and come in Tuesday. But I do look for it. I mean, there is kind of a pattern that if you have a strong week on Friday, you'll get followed through Monday into Tuesday. So, I mean, sometimes it happens. Let me ask you, as far as you're in Florida or California? Oh, so you get to sleep in a little bit longer. I'm on the West Coast. I get up at 4. So what would you say? I'm going to ask you the same question that I asked Schwager. What's the most important lesson, advice you could give people that want to become day traders? The most important part of it. A lot of people say, well, risk management. What's Austin Silver's answer?
Systematic trading. If you have just one system, and you have to detail that system with entry signal, questions to ask yourself before that entry signal, stop loss, how are you going to manage it as it moves for you or against you? If you can detail all of that, test it, demo test it, prove it works, back test it, mark it up, show that that repeats, that's an edge. And if you can just get that down, no other strategies matter. It's great that other people make money other ways. All you need is your one. And then that one can, over time, turn into 2 or 3. You know what I mean? And that's what it's done to give me the 3 that I have now. The 1 turned into 2 and 3. 2 and 3 could not be a thing had it not been for 1, so to speak. So risk management's important. But I think the systematic approach to the way you trade is by far the game changer. Because otherwise you're basically gambling.
Right. So I tell you, I'm very impressed with some of the things you told me. I also can feel your exuberance and passion for what you do,
Thank you.
Austin.
I love
how
it.
long have you been doing it now? How many
So
years?
I am, and I am very passionate, and I love everything that I get to do. I'm just very grateful that I can work with people on the internet, especially during the crazy times that we're living through. Like, for me to be fortunate enough to still be able to do this, it's just, I'm very grateful every day, you know?
Yeah.
But I've been doing this now. This is going into my 5th year trading live. I was kind of in that period before that of the life insurance and the learning about trading and getting out of that business and transitioning. And what's been the game changer, I think, too, is I have my girlfriend, and she's 50% owner of my business, 50% owner of the trading business. She's been the game changer too. She also is getting into trading over the last 2 years. So she's kind of getting her feet wet. But I think that motivation and that drive kind of is a big factor to why I love trading so much, why I'm so grateful to be here and be able to continue to make money doing this, you know?
Yeah. Sometimes partnerships, regardless of gender, 1 + 1 could equal 11.
Absolutely. That's
you
a
like
good
that
quote.
math, huh?
Dale, you need that's a t-shirt, Dale. Come on, man.
Well, Austin, I tell you what, you survived an interview with me, so you know what that makes you?
What?
Yeah? My trading warrior brother.
I like it, man. I'm happy to,
That's
honored to be called
t-shirt.
that. That's a
could,
I like
let's
it.
go into the t-shirt business.
You know what? It's so funny. That's so funny, Dale. I appreciate you having me on, man. I hope we could do it again soon. Maybe if you have time, I'd love to have you do a video, you and me, for the YouTube channel that I make.
Sure.
Yeah, that'd be awesome.
Turnaround's fair play with me. I can go either way on a mic. If you know the connotation, it's not
I got you.
The other way, but on a mic,
I got you.
I'm by microphone actual anyway. So why don't you show people how they could get in touch with you on Twitter? You're at Austin Silver FX. Maybe you could show your website if you like at this time.
Sure. So Twitter, yep, you could hit me here, Austin Silver FX. This is the best place to get me. Same thing on Instagram. I'm easy to get a hold of. And then our website, it's www.asfx.biz. It's a .biz, not a .com. And that's the best place. You can read testimonials. You can see a lot of my videos, all that fun stuff.
Okay. Well, thanks so much for coming in. And, I don't get a lot of day traders. I get people that are, more swing position.
I hope it was exciting for you then.
Yeah,
I appreciate
you
having
what?
me.
I like that. I learned from you. I'm going to look into TDI a little bit and
check it out.
And appreciate you coming on, taking time out of your day. I know you have to get back to your people. And I hope that you and your girlfriend and your loved ones remain untouched.
Thank you. You too, Dale. Thank you.
Pips rain down on you, Austin.
Thank you, my friend. I appreciate it. Have a good day, everybody. Thank you for having me.
You're very welcome. All right. So that's a wrap, everyone. Austin Silver FX on Twitter. And we'll see you tomorrow for Turnaround Tuesday. Don't just count your pips, count your blessings. We'll see everyone tomorrow. Adios.